Okay, great. Thanks very much, Eric. Good morning, everyone. I think many of you are familiar with the great Panther story, but the key thing I'd like to focus on this morning is our new acquisition in Peru. We've been known as a Mexican producer throughout the company's history since I co-founded it in 2004. I'll give you a fairly brief update on our operations in Mexico because I would like to focus on the Peruvian acquisition. We'll be making some forward-looking statements regarding production and the acquisition itself, so I encourage you to do your homework. Just as a brief overview, we are primarily a silver company, but gold makes up a very large part of our operations as well. So we're more than 90% by revenue, precious metals, a small component of lead and zinc from one of our mines in Mexico. We're unhedged, no royalties, no streams, everything's owned 100%. We have a very strong balance sheet at the moment. This is one of the things that separates us from some of our peers in the industry. We've got $53 million in cash, $69 million in working capital, no debt, which puts us in a very strong position, not only to bring the Peruvian acquisition into production, but to continue working on additional acquisitions beyond that. Through the 5-year bear market that we've recently experienced, we demonstrated that we're very disciplined in our operations. We've got our cash costs down significantly, such that even when silver was trading just over $13 an ounce, we were still actually making money at that point. And so with metal prices moving back up, cash flows obviously moving up as well, and so it positions as well for future growth, which, as I mentioned, has been organic to this point, but more on the acquisition side going forward. So just a quick snapshot at the cost side of things. You can see on the left-hand side our cash costs have remained very low, down in the sort of $5 per ounce of silver range. That's net of the byproduct credits, and as I mentioned, gold is our main byproduct, so certainly a nice byproduct to have. On the sustaining cost side of things, which includes all of the capital costs for the company, everything that you need to do to keep an operation running smoothly and ensure the continuance of the operation going into the future. The reason it's come up just in the last couple of quarters is purely because we had a capital project, capital expenditure at our smaller operation in Mexico, where we're starting up a new tailings dam. We needed to refurbish the plant, add some more equipment. We actually shut down the plant for 4 months, so we weren't processing anything during that time, but we did continue to mine. But the cost of that project, which was only about a little over $3 million, that does factor into the all-in sustaining costs. So that's the reason that that's come up just in the last couple of quarters. But that project is finished now. Those expenditures are done. So you'll see when our financials for Q2 come out that they're starting to come back down again. And by Q3, things should be back to normal, more in the $11 or so range. On the revenue side, obviously revenues are tied to metal prices, and so with metal prices coming back up, revenues should continue to be stronger. And as far as operating earnings go, this is essentially your gross profit from the mining operations. And similarly, more metal prices come back up, and we maintain a lower cost profile, profit margins will improve going forward. So just a quick look at where we are. You can see in Mexico, the main operation is in central Mexico at Guanajuato. A smaller operation up in Durango State at a little town called Topia. The new acquisition in Peru, just east of Lima. And for a silver company, Mexico and Peru are the top 2 silver producing countries in the world. So it's an obvious place for us to be focused, and we'll continue to focus on those 2 countries. Mexico has more primary silver producing mines than any other country in the world, whereas Peru has the largest silver resources of any other country in the world. So it's two obvious places for a company like Great Panther to be focused. Just zooming in quickly into Guanajuato to show some of the land holdings in the district. You can see where the main operations are. Just get the right button here. Oops, sorry. There we go. Right here is the main operation just on the edge of the city of Guanajuato. Satellite mine at San Ignacio. We're just trucking the ore back to the processing plant here. But essentially everything in this district is within trucking distance. These are all paved highways. We have an international airport right here. Leon's a city of about 3 million people. So we have excellent infrastructure within this area such that if we can develop the small resource that we already have on the El Harcon project here, then that's also within trucking distance back to the plant. So we don't have to develop a huge deposit that justifies a standalone operation and a large expenditure. When we discovered mineralization on San Ignacio back in 2010, we had it in production within 3.5 years at a cost of about $3 million, simply because we didn't have to build and permit any additional infrastructure. So it's sort of very, very well positioned for additional growth within that region. So at Guanajuato, again, you can see this is a very low-cost operation, about $250 or so on the cost per ounce as far as operating costs go. Sustaining costs a little bit higher. We need to do quite a bit of drilling and mine development because we're operating 500 meters below surface. And this operation accounts for about 3/4 of our total production. Most of that is coming from the San Ignacio project, as I mentioned, just west of town, trucking the ore back around to the processing plant here. We've been operating in this area here. This blue lines represent the underground workings where we are currently. And just recently we've been stepping out, following the veins down in this direction where we've been getting some very good results. Right now, as I say, this is about 60% of the production going through the processing plant. And the new drilling, just a close-up of the project. New drilling stepping out in this direction here. You can see a little bit more detail. Where these two vein trends come together, there's a thickening where they join, a little bit like if you can imagine a wishbone type situation on your Christmas turkey where the two bones come together right at the joint. It's obviously a lot thicker. So we intersected a little over 19 meters of 6.4 grams gold and 260 grams silver. So very, very nice intersection for us. And we're currently driving an access way from underground from the existing workings up in this area down to that thicker area in order to further develop that from underground. So it certainly bodes well for this project and for Guanajuato in general. We still have lots of work that we can do to follow this vein trend down this way and also up to the northwest. And we're currently drilling up in this region up here as well. Just at the smaller mine in Durango, this is the one where we've just been doing some work on the processing plant. So as I mentioned, the plant itself shut down for about 4 months, but we did continue mining and stockpiling the ore through that period. We're mining from about 9 different veins in the district. The processing plant is right here on the edge of town. And so we just truck the ore from the different veins back to here. This is a high-grade, narrow vein operation, so it tends to be a little bit higher cost, but the grades are quite a bit higher. You can recall over at Guanajuato and San Ignacio, the silver grades are running sort of 150 to 250 grams per ton. At Topia, they're more than 400 grams per ton. So it's a very high-grade operation, and that compensates for the higher costs, the higher operating costs. So now that we're finished upgrading the plant, we finished the commissioning towards the end of May. We're back running at full capacity now and processing all the ore that we stockpiled during those 4 months of shutdown. The plan is to work our way through that stockpile while we continue to mine on the current operations, such that we will catch up by the end of the year all of the 4 months of stockpiled ore. So For that reason, we haven't changed our guidance for the year. We're still looking at about 4 to 4.1 million ounces silver equivalent. Cash costs are around $5 to $6 per ounce, and looking at sustaining costs, we're probably going to come in around the lower end of that, so somewhere around $14 per ounce. And so you can see it's down quite a bit. That's the average for the year, so that would include the 19.5 that we saw in Q1. So it demonstrates the fact that that was just a temporary thing because of the extra capital expenditures. Okay, so moving on from the existing operations, every mining company needs to have a good pipeline of projects. You need to keep growing. Mining, as we know, is a non-renewable resource and non-renewable industry, and so you need to have a constant feed of new projects coming in. And as we moved San Ignacio from discovery back here all the way through the pipeline to production, we need to keep following that with other projects in order to ensure that the company continues to operate and to grow. So I mentioned Del Horcon, which is the other one in the Guanajuato district that we're hoping to move up through the pipeline with some additional drilling. But more importantly, right now, we're just in the process of closing an acquisition on the Coricancha mine in Peru. This is on care and maintenance at the moment, has been since 2003, but our goal is to bring this back into production hopefully by the end of 2018, and therefore move it from this category back up into here, and this would become our third operating mine. And so this is just what our growth has looked like since starting the company in 2004. The original business plan was to get into production quickly, and we did that by 2006. And you can see how we've grown our production organically through that period over the last 10 years or so. But we've reached a point now where we're essentially at capacity on the operations, and so we're more or less flatlining at the moment. And in order to keep growing, we need to do so through additional acquisitions. And so the Coricancha mine represents the first step in this next phase of our growth. And we do intend to continue looking for and acquiring other projects like this. And to that end, we've just, as Eric mentioned, hired a new VP Corporate Development, who's here with me today, Sam Ma. And we've also just hired two other new vice presidents, a new VP Exploration and a new VP of Operations as well. And so really building up the team. And this also fits in to a large degree with my own decision to step down later this year, bring in a new CEO to carry the torch forward, so to speak, into this new phase. We just thought that rather than bringing someone in midstream, partway through this next phase, that better to do it now, where that the new individual would be coming in on the ground floor and really have more of a sense of ownership in this next phase, and perhaps even help to target the next acquisition for us. So there's no particular time frame on that. I'm not going anywhere. I'm going to stay on the board and be very active, particularly in helping the company grow in Peru and try to replicate the success that we've had in Mexico. So looking forward to continuing that. And given that I'm still the largest non-institutional shareholder in the company, I've got a significant financial stake in making sure that we do continue our success and that our goals are properly aligned with our shareholders. So just a few slides on Coricancha itself. This really represents a near-term production opportunity. We do hope to have this in production by the end of 2018. We're going to conduct a pre-feasibility study this year, and we expect the acquisition to close perhaps next week. There's a good chance that once I get home tomorrow night, be able to perhaps relax a bit for the weekend before getting back on a plane and heading down to Peru on Monday to take possession of the mine and change the name on the gate, and we're pretty excited about getting going with this. So. With that, we will be pushing forward, and we've already started a project to update the resource, and that should be finished hopefully by the end of Q3. So just a couple of shots here. You can see the plant and the mine. It's only 90 kilometers outside of Lima, so it's very close. We're right on the Central Highway, which you can see right here. So in terms of infrastructure, it's tremendous. You're only a 3-hour drive outside of the main city. And we have a river right beside us here, hydroelectric plant just off the photo. So power, water, access, all of these things are really not an issue. In that 90 kilometers, which is a pretty windy road, you actually climb from sea level at Lima to 3,000 meters elevation, which is where the plant sits right here. The mine is in this mountain across this valley, and goes from 3,000 up to about 4,000 meters. So still not too high by Peruvian standards. There are mines over 5,000 meters down there, so being able to operate at 3 to 4 is pretty good. But everything's fully permitted. It really just requires us to go through this PFS process and bring the mine back into production. The resource that we're updating, I just throw this up here to indicate that it is historical, dates back to 2012, and that's why we need to update it. This was done at $22 silver, so we'll be using current metal prices. So these numbers will drop. There's no question of that. But at this point in time, I can't say what the new numbers might be. But keep in mind that this is just a classification exercise. That once we go through that update, the mineralization is still there. So should metal prices come back up again, we can redo the resource base again. But it is a very significant resource, and we're pretty excited about getting going on this. So just a quick word on the agreement itself. This project is currently owned by Nearstar, at least for a few more days. And they're getting out of the mining business entirely, which meant that they were, you could say, a motivated seller. They were getting out of Peru, and this allowed us to negotiate a deal that is a risk-sharing model and one that works very well for us. So we'll only pay $100,000 on closing, and then we don't have to pay anything else to Nearstar until the mine is up and running, profitable. We've paid back all of our investment to get it to that point, and only then do we pay 15% of our cash flow for a 5-year period to a maximum of $10 million. So if the project works and metal prices come back up, we'll be more than happy to share the profits with them. If it doesn't, then we're not just lining their pockets while we're left with the liability. It works very well for us. During that time frame, we also don't assume any liabilities for reclamation or anything like that. So they'll take care of any of those issues and keep the bond in place for the next 3 years. So I've mentioned most of these catalysts will be closing very soon. An update on the exploration results, which I didn't mention. We actually had this project under option for a year, spent $2 million, did a lot of drilling, got some very good results that encouraged us to move forward with the acquisition, but those were never actually released because we terminated the option. So those will be coming out fairly soon as well. We're going to initiate the pre-feasibility study, update the resource, and hopefully get to a production decision by first quarter of next year. Just briefly on the capital structure, we've got about 168 million shares on issue, very liquid stock, trading in New York and Toronto. Right now we're trading about 2 million shares a day. And importantly, we're trading at about a 52-week low right now. And the reason for that is that we saw in February, after we went through last summer's doldrums, and just mentioned this little peak here. First off, when silver ran to $20 last year, we were able to finance right at this point here, so it put $30 million in the bank. It was very well timed. and that put us in a very strong position to go through the acquisition of Coricancha and be fully financed to production. But when the market came back up to a peak here in early February, there was a massive sell-off, perhaps just through profit-taking throughout the industry. So a big correction here, and then we're starting to stabilize. And then in April, there's an ETF, an index fund in New York called the GDXJ, the Junior Gold Miners Index. They announced that they were restructuring the fund and buying about 20 or so new companies. And in order to do that, they had to sell down the companies that they currently held. And so they published a list of those companies and how many shares they were going to sell in all of those companies. So they came out in April saying that they were going to sell down about 14 million shares of Great Panther, which was about 8% of our entire issued shares. So a very significant amount. So of course the short sellers jumped on that right away. We got hit pretty hard, and then nobody wanted to catch a falling knife. And so until the rebalancing actually went through, which was just last Friday, the stock's been had a lot of downward pressure on it, and we've managed to stabilize a little bit. But as I say, we're at about a 52-week low right now, and so it's one could say that now that the rebalancing is out of the way, and all of this was purely market-driven, had nothing to do with fundamentals of the company, that we're in a very strong position for a rebound. And it just shows how it dragged down the entire industry. So all of our peers have really been dragged down over the last year. Very strong leverage to silver. And so just to wrap up, we are a low-cost producer, and great balance sheet right now. It puts us in a great position to continue our acquisitive growth, and we've demonstrated that we can successfully grow production while keeping our costs down, and now expanding into Peru to hopefully replicate the success that we've seen in Mexico. So with that, I thank you for your attention, and enjoy the rest of the conference.
Thank you, Robert. Excellent.